Hello and welcome to a VSA Capital video. I'm Ollie O'Donnell and today I'm delighted to be joined by Simon Clarke, CEO of American Lithium. This is an update video. We've interviewed Simon before. They've just had annual results, so it's a good time to recap on recent progress and also hear what the plans are for the future. Simon, thanks for joining us. How are things in American Lithium?
Nice to see you again, Ollie. Yeah, I mean, things are good in the company. Obviously, markets have been somewhat challenging in general, but I think we've seen a bottom in the commodity, and hopefully we're going to see stronger markets coming up as we move forward here.
Yeah, absolutely. Perhaps we can start off by running through some of the key lines of expenditure along with what you've achieved over the last year, as you had some big milestones which probably account for most of the cost lines. Let's start with TLC because the PEA was out first in Nevada.
Yeah, I mean, we were pretty delighted with the work on that. It was a process where we really took time, I think, to really understand the claystones in our part of Nevada. And we looked at a number of different ways to process. Our key goal was we didn't want to be subject to any new technology or direct lithium extraction. We wanted to use conventional mining approaches and prove that the recovery from claystones is very achievable and obviously produces good economic results. And I think our PA did that. Obviously, we came at it independently from Lithium Americas, but it was very interesting that the day before we announced our PA, they updated their flow sheet and economics as part of the investment from GM, and very similar flow sheet to ours, both using conventional sulfuric acid leach. Unlike a lot of mining projects in the brines or pegmatites, this is way more of a conventional mining project. You use sulfuric acid leach, and then you take out the impurities through a number of steps, and you're left at the back end with a high purity lithium carbonate product that can then actually be taken to battery grade on site, either a battery grade hydroxide or a battery grade carbonate. So very different from what you see certainly on the pegmatite side of things, and no need for the product to then go offshore to China or wherever for upgrading or refining. So we were very happy with the result, Ollie. The op cost that we came out with was very similar to where Thacker Pass is at. They're about 7.2 thousand dollars a ton, and we were about 7,400. Capital intensity was better on our side. We sort of left the final step of the battery grade conversion piece out of the flow sheet. They included it. They have a bigger footprint than we do, although obviously we focus on 24,000 tons as stage one, going to 48,000, and we do indeed have the resource that would take us a further step. So the other thing that was clear to us is we are the second biggest claystone project behind Thacker in terms of M&I resource, and because we're able to high grade our resource and then pre-concentrate, our head grade is second only to Thacker as well. So we think it was a great result. As I said, we wanted to spend a lot of time on it and make sure we fully understood it, and since then we've continued to refine and move things forward. There's certain areas we think we can optimize, and as we look towards pre-feasibility and continuing to evolve the flow sheet, we're very comfortable with what we see and very pleased with the work that's been done to date.
Excellent. You mentioned Lithium Americas. They obviously received a multi-billion dollar funding package from the US state. That's potentially a vote of confidence in claystones, lithium projects. How do you see that as a read through for American Lithium?
For us, there is a roadmap. I mean, obviously, in North America, there is a real need and a drive to produce domestic lithium. I mean, there's been very little historic production in North America, and obviously Thacker Pass is slated to be a big project that'll come online, over the next couple of years, and the key for claystones, like I mentioned, is unlike pegmatites, there's no need to involve refining or upgrading offshore. And I think that is a huge reason why you've now seen the DOE provide billions of dollars to Thacker to build the project. You've seen the same at Ioneer. Ioneer, smaller project to us in terms of the lithium output, but it's more advanced in terms of feasibility. They're in the final phase of permitting. They've got their equity and their debt pieces in place, and the debt is effectively being provided by the DOE. So, I think the claystones are the projects that make the most sense to fund, because again, in the time of critical minerals and domestic energy supply, you don't want, a concentrate having to go offshore for refining and upgrading. So these are the projects the DOE seems to be focused on. There's a number of different pots that are available. We're involved in a couple of applications, and as lithium matures as a product to the point where you get more mainstream financing available, it's clear that the US government is going to step in and help provide the debt piece to make sure these projects get built. So I think a really good sign for the lithium side in general, but especially for the claystones, which again are the only ones that, unless you have an integrated process on a pegmatite side, which takes a lot of time, and we just don't have the upgrading and refining base in North America yet, then I do think claystones will be the winner.
So what can we look forward to in terms of milestones and work streams at TLC this year?
Yeah, our main focus at TLC at this time is to really optimize the flow sheet, and by that we're very comfortable with the core flow sheet. It's sulfuric acid. It's a conventional mining approach, tried and tested. The trick with the claystones, obviously, are you do have a number of impurities you have to remove. The biggest impurity for us is magnesium. And it's funny, we actually believe magnesium sulfate of high purity is going to be a more and more important secondary fertilizer with other applications globally. So we think there's a market that will develop there, which would, obviously boost the economics further. But just focusing on the lithium only side, we want to reduce lithium losses through that phase. As I mentioned, we are one of the few projects in the claystones that can successfully pre-concentrate. We take about a 1400 ppm head grade and then pre-concentrate it to about 2200 ppm, which obviously helps the economics in the flow sheet. And we're going to continue to look to optimize that as well. And then, once we're comfortable that we have optimized the flow sheet, really then it will make sense to drive the project through pre-feasibility. And the other side we're doing a fair amount of environmental monitoring and work, which will be required once we get through pre-feas to really start the process of permitting a mine at TLC.
Excellent. So obviously your other assets are in Peru, another massive lithium deposit, and a uranium deposit as well. So there are quite a few milestones you achieved in Falchani last year, resource increase, PEA, additions to the local team. Talk us through those, please.
Yeah, so I mean, Falchani is further ahead than TLC. It is a hard rock, but again, it's not a conventional hard rock. So again, we're looking at a process which is more of a traditional mining flow sheet. Because of the purity of Falchani, it's not one where you would need to concentrate it and then again send it overseas for refining or upgrading. It's a style of mineralization. The lithium's hosted in a volcanic tooth of volcanic glass, and again, using conventional sulfuric acid leach, we're able to extract high purity lithium carbonate, even higher purity than we see at TLC, and because it's a purer form and a higher grade form of lithium mineralization, the impurity removal tends to be more straightforward at Falchani, leading to an op cost of about $5,000 a ton, which puts it in and amongst the best projects on a op cost profile globally. So a really, really exciting project. The other thing that we have going for us in Peru is it's deemed a non-metal, which helps the permitting process. And we've been very proactive in Peru in filing environmental impact assessments, which you'd have seen through the course of last year. We filed the first phase of that. And this really helps us drive the project forward. It allows us to ultimately, once we get the first phase approved, which we're expecting shortly, we can drill anywhere at Falchani without the need for additional permits. And it sets the framework for permitting and getting approvals to build a mine. So helps short circuit the back end as well. So as we move through this year, we've obviously saw earlier in the year a big increase in our net present value in the updated PA re-released, and that's really a big piece of our move to pre-feasibility. I mean, we've updated all the economics, the vendor side of things, and so we're very confident in the numbers that PA put forward, which would give us a net present value at Falchani of over $5 billion, which is a huge number. It's a big project. The op costs are great, as I mentioned. The capex at about 680 for phase one, 680 million, is relatively low for these types of projects. And then obviously, as you ramp up thereafter through phase 2 and 3 at Falchani to north of 80,000 tons, it's self-funding. So it's a great project. We hit a lot of milestones. You also mentioned I think our M&I resource increased by close to 500% through the drilling we did. And so we're at the phase now where really we're very close to having optimized the flow sheet, and continue to do pieces on that, and then combined with the work we've already done on the PEA and reclassifying, most of the resource now is measured and indicated, so that will become the reserves in pre-feas. Our goal would be to pull all of those streams together over the next several months and complete pre-feasibility, and then really drive the project hard into mine permitting. Not only is it more advanced through the development cycle than TLC, like I mentioned, because it's deemed a non-metal in Peru, the permitting process, the approval process, once we have all the pieces in, can be as little as 6 months, assuming the processes are working as they should. So we believe that there's a lot of velocity in Falchani that could drive it to final investment decision late next year or early the following year if everything comes together as it should and we see it.
Excellent. And Peru's been out of the global headlines for a few months, so I assume that means that the political situation situation is pretty stable.
Yeah. I mean, Peru is first and foremost, I'd say, a great mining jurisdiction. Peru does have a voting system for presidents that does allow anyone to run, and it can throw up surprises, as we saw, a few years back, and you can end up with someone that's not really held political office being in power. And that can lead to issues. The Congress is typically center right in Peru to a large extent. And, we saw a situation a few years ago where that put the president at odds with the Congress. And a lot of, we went through a lot of dysfunction in the mining ministry in terms of getting permits and being able to move the work ahead. And, I think our team was very proactive in filing, our environmental impact assessment early. That's a prescribed process. It allowed us to get drilling. It allowed us to move the project forward. And then as the regime changed and we've moved into, we've now had a new regime in charge now for coming on 18 months already, which seems crazy to say. But we've seen a lot more of a normalization in the mining sector. This government has stated and seems to put a lot of emphasis on the economy, and mining obviously is a critical piece of that. And so we've seen the permitting process start to improve. We've seen initiatives to really help the permitting side of it in terms of mine permitting as well. And so what we're seeing is much more of a normalization of the mining sector at this time. And Peru is number 2 copper producer in the world. They've gone on record as a government several times now as saying they really want to see lithium become a major industrial metal in Peru. And, obviously we are the key project there. And, hopefully that will lead to continued and additional support as we drive things forward.
And the third project, which perhaps is more of a question for what's going to happen going forward, is your uranium interest, Macusani. That's also in Peru.
Yes, yeah. I mean, Macusani, when we acquired Plateau as a lithium developer, we were obviously more focused on Falchani as a real, we think, a real world-class lithium asset. But at the same time, we acquired what is the fourth largest undeveloped uranium project globally. It's in the Nuclear Fuels Report as a prospective mine. It's not a project that needs very high uranium pricing to make money. It's got a very good operating cost profile at about $17 a pound, which obviously looks really good in a $90 a pound price environment that we are in today. As we've always said, Ollie, obviously this project does not sit long term within a lithium developer. I think if it was in its own vehicle, and if you obviously take out Fukushima and COVID and other major things that have happened in the world in recent times, the project would probably be in production. It's a large asset, 124 million pounds. It's the acid consumption is extremely low. It's very easy to recover, again using sulfuric acid leach. Very low strip ratio on the mining side. So it's got a lot of things going for it. And so, we've really been taking our time over the last few months, really trying to make sure we figure out the right way to monetize the asset from a perspective of American Lithium, but as importantly, unlock value in this asset for the company and its shareholders. I mean, it's our third asset. It gets hidden behind the other two. If you look at what uranium developers trade at in its own vehicle, it would probably be worth, several hundred million market cap. Obviously, we don't see that in American Lithium hat. So, for us, it's about how do we unlock some of that value and bring value into American Lithium and the company, and yet at the same time provide this project, which is on the other side of the plateau from Falchani and is important for a number of our communities. How do we figure out the best way for that project to really start to drive forward? I mean, it's ready to pilot. It's had a number of economic studies done on it. It's a consolidation play that involves a big piece that was owned originally by Cameco, and they did a lot of work on it, including producing yellowcake back in the day. So it's an advanced project that needs to go through feasibility piloting and can advance very quickly. And Ollie, our goal here is to find the right way to put it in its own vehicle and right team, drive it forward, but obviously on a cooperative basis with our team on the ground who've built that project over a 20-year period. So, I think we're close on a number of fronts, and uranium's obviously had a really good run over the last little while. The price settled back a little bit, but everything you see about uranium would tell you that we're early. We're in the first innings of a big cyclical uranium boom. So, again, we want to get this right, and we are committed to do that. And I think it'll bring a lot of benefits for American Lithium, but also for the uranium project itself.
Great. And so the company now stands with about 11 million in cash. So a healthy position to advance the core projects forward. There is also a slightly different strategy with your investment in Surge battery metals from last year. So what's the latest with?
Well, we continue to really like that asset, Ollie. It gives us good flexibility. Ted O'Connor is on the board, and we've, as we said we would, we've supported them in a number of ways, and we like the project. And I think we always thought strategically there could be a good fit, as we move forward. I mean, obviously, with the fall in the lithium commodity and some, obviously. The risk-off trade is still to the fore. Everyone's been somewhat hit. Our investment in Surge is still, at or around where we made the investment, and we'll continue to monitor it. I do think, as the sector comes back, you are going to see projects which are deemed more unconventional, including the claystones. It's funny. It always makes me laugh when you talk about miles and miles of evaporation ponds on one side, or a process where you have to take a pegmatite and melt it to 1,000 degrees or concentrate it. They don't really seem conventional to me, but that's, I guess, the tried and tested approach on the lithium side. So I think, as the sector swings back, we'll get more and more attention back on the claystones and some of the other styles of mineralization. So, we've been very patient with the investment. It does provide us flexibility if it makes more sense for us to exit it at some point. Obviously, that's additional working capital for us. But at this stage, we like what they've done. We've got a good relationship with the team, and we'll continue to see how things evolve on that side.
Excellent. Well, just on your point about conventional production, I mean, the evaporation ponds really only came in the 1990s, so it's a 20 or 30-year-old production technique. So the lithium market is constantly evolving. We see new techniques and new styles of deposit come in every so often. So from that perspective, I don't think people should write off claystones at all.
No, agreed. I look at something like a claystone, and again, it's much more what we've experienced, what Thack has experienced, and I think what Ioneer has experienced is it's much more of a conventional mining project. If you think of gold and copper, in terms of, sulfuric acid leach and producing a high purity product at the back end. And that's really what I referenced. And I think at some point here, that will definitely get recognized. It's certainly been recognized by the DOE in the US, which again, I think is why you're seeing the majority of money on the lithium side go into the claystones from the government. And I think that will start to resonate again with the market as we move forward.
Excellent. Well, let's leave it there for today. Thank you very much for your time, Simon. There's plenty to be getting on with, and we'll be checking up on you in a few months' time.
Perfect, Ollie. Thank you very much. Appreciate it.